Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock
Hello,
picks of the
everyone,
week.
and welcome to Zach's Top Stock Picks of the Week. My name is Brian Hayes, and this week I'm joined by fellow Zach strategist Brian Bolin. My top stock pick this week is a real estate investment trust, or REIT, and is a leading operator of upscale outlets. In fact, it's one of the largest owners and operators of outlet centers in the United States. I'm referring to Tanger, formerly known as Tanger Factory Outlet Centers, ticker symbol SKT. Tanger owns and manages a portfolio of nearly 40 properties. Its outlet centers comprise over 15 million square feet and are located in 20 U.S. states as well as Canada. These centers are leased to over 3,000 stores that are operated by more than 700 different brand name companies. This company is a fully integrated, self-administered, and self-managed REIT. They're publicly traded since 1993, and Tanger has over 40 years of expertise in the retail and outlet shopping industries. So that's a bit about this company's background and services. Let's shift gears a bit and take a look at their industry group. Digging a bit deeper, Tanger is part of the Zacks REIT and Equity Trust retail industry, which is currently ranked in the top 21% out of approximately 250 industries. Because it is ranked in the top half of all Zacks ranked industries, we expect this group to outperform the market over the next 3 to 6 months. Quantitative research studies suggest about half of a stock's future price appreciation is due to its industry grouping. In fact, the top 50% of Zacks ranked industries outperforms the bottom 50% by a factor of more than 2 to 1. So by targeting stocks contained within leading industry groups, we can dramatically improve our odds of success. And take note of this group's performance lately, particularly during the early August plunge when the market really sold off. Stocks in this group showed relative strength and held up very well through the volatility and have continued to show strength in September. Stocks that hold up best through pullbacks and corrections typically go on to lead the next leg higher. And we can see over the last 3 months, this group has averaged a return of nearly 14%, while the market is showing a return of closer to 3%. Also note that this group is relatively undervalued based on the forward price to earnings ratio. And moving to our snapshot page here, we can see that Tanger is a Zacks rank number 2 buy. The retail REIT has established a healthy track record of beating earnings estimates. Tanger has delivered a 4.1% average earnings beat over the last 4 quarters. So they've been consistently beating earnings estimates, and the stock price is reflecting this. Tanger is outperforming this year and recently broke out to an all-time high. Also of importance is the fact that Tanger pays a $1.10 dividend, equating to a 3.58% yield. So as interest rates begin to decline, investor appetite for REITs begins to increase as their yields become more enticing, along with the potential for significant share price appreciation. And we can see here that analysts covering the company are in agreement and have been raising earnings estimates across the board. Estimates for the current fiscal year have increased by 1.46% in the past 60 days. The Zacks consensus estimate now stands at $2.09 a share, reflecting potential growth of roughly 7% relative to the previous year. Revenues for the year are projected to climb 12.4% to $493.2 million. These are exactly the types of trends we want to look for when narrowing down our list of potential stocks. So Tanger, ticker symbol SKT, is my top pick of the week. The company is a leader in the retail REIT space. I see more upside ahead for this company, particularly given the interest rate outlook Thanks for watching, and next up, Brian will share with you his other top pick of the week.
Well, thank you very much. That was Brian Hayes giving his top stock pick for the week. And now it's my turn, and I am Brian Bolin. I am the aggressive growth stock strategist here at Zacks. And my top stock pick for the week, a little bit off the beaten path here. This is a gold miner, and we'll get right into it here. It's Idaho Strategic Resources. You can see it here on my screen. I just put my line right through it. IDR is the ticker. Let me get rid of that line. And we'll see that it is a Zacks ranked number 2. It was a 1 just the other day, so that's a buy. A for growth and D for value. These are things that I love to see in my aggressive growth videos. I want to see a strong growth score and a weak value score because that tells me right away I'm on the right path because I'm looking for growth. All right, so we've got a miner. It is a little bit small. We're only at $168 million on our market cap. We're not paying a dividend. Earnings ESP is nothing right now, and we won't report until November the 4th. Something about that day. I wonder what it could be. Does anyone know? Well, we'll take a vote on it, and we'll see what you think. All right, let's take a look at the numbers that we always look at when we're looking at a stock. Are you beating the number? Here's a 200% beat. Here is a 3-cent miss for a 60% negative earnings surprise, then an 11-cent beat for a 183% surprise, and a 10-cent beat for a 142% surprise. Importantly, we're making money every quarter for the last 4. Making money. We've got a big 116% average positive surprise, and that's with the miss, so that's good. Here's the key, though. This is why we like this stock. Your earnings estimates movement has gone vertical here. 7 cents up to 20 cents, and then next quarter, 7 cents up to 18 cents. For the full year, boy, we're looking at almost 3 times here, but 2.5, no problem. 27 cents up to 72 cents. That's great to see. Next year, sitting at 68 cents, because that estimate just came out last week. Let's take a look at our growth. Is there growth? And the answer is yes. We're only looking at 25 million on top, but that's a growth of 88% this year. This analyst looks to be a little lazy, maybe, I'm going to guess. He just put 25.7 in for next year, so no growth. I would imagine there's still going to be growth. Maybe he'll check his model again down the road, and it'll turn out better. All right, so here's our valuation. 18 times forward earnings, 6 times price to book, which is kind of heavy for this sort of thing because there are a lot of assets in a gold mine, a lot of diggers, a lot of land, all that sort of stuff. Almost 8.8, almost 9 times price to sales, but we saw that good growth. And here are our margins as they go from 8.5% to 20% to 26.7%. That is margin expansion, and that is a good thing. That stock should be rewarded. All right, our charts aren't working today, so my friends at FinViz are going to give me this chart here. So we're only going to look back about a year, and we can see here is that earnings miss, here is an earnings beat, and here's another earnings beat. And you can see here's our recent little breakout trend up. Little resistance at 14, but you can see volume has really expanded right there. So from very little volume to a lot of days of big volume, that's an indication that things are probably starting to heat up. A lot of central banks are stocking up on gold. You know, China has been a big buyer of gold over the last several months. So let's take a look at the price of gold. Miners are often tied directly to the price of gold. You can see it's hanging out, it's going up and down a little umbrella, and then the umbrella moves up, and then a big move up March to middle of April, come in a little bit, hang out, and now are we starting to make that next big move up? $2,500 level is a key key resistance level in the minds of investors. Couldn't speak right there, but I would expect the price of gold to keep on heading higher. Inflation is still persistent, even as rates are being cut. There is geopolitical uncertainty, and that leads people to buy a shiny metal that they believe is going to be worth more in the future. And that's why I like IDR, Idaho Strategic Resources. And that is my top stock pick of the week. All right, that's it for this week. Be sure to join us next week. We look at 2 more top stock picks for the week. Until then, why don't you go to Zacks.com/promo to check out all of our latest promotions.